My name is Kanyisile, and I'll be guiding us through today's lecture. And very key to emphasize, I am guiding through the lecture, meaning I am not doing all the talking. I am very needy. So I'll let you guys know upfront, I'm a very needy lecturer, so I need you guys to talk to me so that I know that we are still on the same page, we are still understanding each other, and if we aren't understanding each other, that we give each other a chance to catch up. Okay. Um, maybe first, by way of introduction, I I obviously lecture at Indonamo. I lecture the accounting program, accounting discipline through a few programs. When I'm not lecturing, or my main job is that I am an IFRS specialist at one of the banks. So I spend a lot of my time in IFRS, working through IFRS, reading IFRS, reading about what's coming up, what the boards are talking about, um, debating within the team about how we interpret different requirements within the standard and how these should be applied. All of that is to say that I am looking forward to debating with you guys as well. Nobody knows everything, so I'm under no impression that I know every single paragraph in IFRS. I'm very open to different interpretations. I'm very encouraging for you guys to tell me if you interpret something different. So if I tell you how I interpret a certain paragraph and you've got a different interpretation, I encourage you to have a discussion. Let's see how you're reaching how you're reaching your interpretation versus how I'm reaching mine. Let's see where we can find alignment and maybe where we can't. You will see, and I think you will have seen by now, after having completed CTA and all that stuff, that, oh, can anybody else hear me?
Yes, we can hear you.
Okay. Okay. Thank you. Okay. Thank you. Um, maybe Matriso try to log off and log back in and then see if you can hear. Okay. So, I mean, you'd have seen by now, having gone through CTA, that a lot of the discussion questions specifically require you to bring forward your own judgment. We require you to justify your judgment. So that's why it's actually really encouraged that even in the classes when we're having these discussions, that you bring forward what you think, what you believe the answer to be. If we disagree, let's talk about why we're disagreeing. Because in any questions, you will need to be able to justify the conclusions that you make, right? It is never enough to say what answer you believe. What you will need to do is always be able to justify it. Okay, you need to support your answer, explain why you think the answer you're putting forward is the correct answer. So very good to practice this during the class. Okay. So all of that is to say, I need to hear voices. I need to hear voices throughout the class, voices other than mine. And I'm looking forward to engaging with you guys and learning from each other and challenging each other. Um, and maybe I can just pause there. Today we'll be talking about revenue. So maybe I'll pause there and just hear how you guys feel about the standard. Um, is it something that you find relatively easy to work through? Is it something you've generally struggled with? And if so, which particular parts do you find most challenging? And we can see how we can how to assist with that as we work through it today. Hi, Zintle. Zintle?
Hi, sorry, I was struggling with my mic here.
No
Um,
problem.
Good morning, everyone. For me, when it comes to revenue, yo, it gives me nightmares. It gives me anxiety, because I try even with the illustrative examples and to just read and um, draw pictures of what's happening, but I still don't get it. Like not like I still don't get it. Maybe at the time when I'm doing it, I find like, okay, I get it. But at the time of being tested on it, I get so confused, get lost in it. It gives me goosebumps, anxiety, not even goosebumps. Goosebumps are good. Anxiety. Yeah.
That's what goosebumps are good. Okay, so it sounds to me like you feel like you understand the principles when you're going through it, but it might be the actual volume of information that's in the standard that of the volume of the information in the standard, as well as applying that to the questions, because the questions can also be quite large. That might be, I guess, trying to figure out how to structure your answer or figuring out what the question is actually asking you that might be tripping you up.
Yes, the structuring, because
Okay.
the steps, and then when you come to integrate the steps and structure and get like skip step 1, go to step 3 or 4 and 5. I don't. It's like and we're
Okay.
starting with it. Like already, I'm not liking the lecture, but yeah, sorry, but yeah.
I'm sorry. I'm hoping we can ease some of that anxiety, because one of the things we will speak to is exam technique, right? How to go about, hopefully it will make it easier for you guys to have a structure to say, okay, if they're asking about performance obligations, how do you structure your questions so that you're able to think through logically what they're asking you, but more importantly, hit the key points. Like, this is the logic to think through, but then this is how you work through it so that you bring that forth. So hopefully, um, we're able to ease some of that anxiety. If not, let's see. Let's talk afterwards and see what else is still, how else we can help. And of course, we'll talk through it today, but you will need to actually practice what we talk about, right? You have to do another question and see if what we're saying, um, see if what we are saying today actually makes sense to you, if you can apply it by yourself without us working through it as a group. So there'll still be work that you guys need to do to actually see how to make this real for yourselves. But yeah, let's see if we can ease the anxiety, because yeah, it is a lot of information, truthfully, but it was never meant to be too hard, right? It's meant to have a logical way to work through, and it is possible. It is possible. Um, we just need to find a way that works for each person. Felicity?
Good morning, Kanisida. Can you hear me?
Yes, we can hear you. A bit soft, but we can
Okay.
hear you.
Okay, morning everyone. I think now from my side, I think I do better when it comes to discussion. But then when it comes to calculations now, it's a bit of a nightmare, especially when it's integrated. I think when it's separate principle, when you're just testing maybe let's say, for example, contract modification alone. But if you start bringing a lot of things in just one scenario, I get so confused to say, what am I supposed to do with this calculation now, especially because mostly it's journals or yeah, something like that. So yeah, for me, the discussion, I think I'm comfortable, but I think it's the calculations that get ahead of me. And I get stuck, then I black out basically.
Okay. Okay. Also sounds more like an exam technique. I think what I'm hearing a lot of is that the volume of information in the question is what tends to trip people up, because it's just like, I actually don't know what you're asking me and I don't know how to approach it. And yeah, I think that's going to be a very key part of not just today's lecture, but all the lectures, so all the different topics. A very key part we wanted to touch on is the exam technique. So I'm really hopeful, and it's very encouraging, because my view is, once you've got the discussion on lock, it kind of indicates that you understand the principles, right? It's a very good indication that you understand the principles and you can apply them. But the numbers is what's tripping you up, but that's a structure thing, and we'll work on that as well. Happiness?
Good morning, everyone.
Morning. You're also a
For
bit
me,
faint. Okay, I think
oh,
it's me. Okay, I can hear you.
can you hear me?
Yes.
Um, for me, it's just everything that my colleagues have said. Just to add on that, it's just the journals. When I see
Sorry, Happiness.
journals,
I actually can't hear you. You sound muffled.
okay, let me check. Can you hear me now?
Yes, much better. Yes. Okay, you've gone now, but we could hear you. Happiness?
So can you hear me now?
Yes.
Yeah, so I was saying, for me, everything that my fellow candidates have said, just to add on top of that is just a journal. When I see the question said, write the journals or maybe correcting journals especially, oh, I got so scared, I got so stressed, I'm like, you know, what do I do here?
Okay, okay. So it's journals. And I mean, journals are quite important, right? Because that's how you get the information into the books. So it is
Really?
also it is very important that we know how to do it. So I mean, journals are a few things. It's the structure of the journals, which I think you guys probably have unlocked by now because I think it was drilled into you guys during CTA. But it's also knowing, okay, what should go into this journal? So if you're telling me to write a journal, what exactly do I need to include in this journal? Um, and I think the journals, and we'll talk about it as well. I think what sometimes makes it hard to think through the journals is before you can put an amount in the journal or you know what to put into a journal, you've kind of had to go through the process in your head. You've had to think about what are the POs? Do we have one? Do I have two? Okay, cool. If I've got two, what's the transaction? So you've actually had to go through the steps before you just get to measuring and allocating. And because they say journals, you think immediately measurement, but you can't just jump to measurement. Measurement happens after recognition. So I think that's usually what trips people up with journals, that there's a part that we're not sure how to make that link because it wasn't triggered. The question didn't immediately say think recognition. It kind of forced us into measurement, but we can't do that without the recognition. So again, in part C, when we look at Printco, we will talk to that. So hopefully, journals and calculations. Journals, part C. Part B, we will talk to calculations as well. So hopefully, guys, these calculations that are stressing you guys will be stressing you a little bit less, right? So very key, guys, as we're going through the stuff and we're going through the question, if I get to a point where I'm going too fast, I'm going over this calculation, you're still like, I still don't understand what this girl is saying. Stop me. Let's go back. Let's revise. Let's see which area where you were following and where I lose you, so that we can learn in this class, and then you can hopefully remember these things we're learning, so that you can remember these pointers going forward, and so that the rest of the class can also learn, right? So we can learn from each other. Okay, Tatenda. Tatenda. I see you off mute, but I can't hear anything.
Hello, can you hear me?
Yes, I can hear you.
Okay. My challenge is picking the promises in the contract. There will be many triggers, so I won't be sure which one is the best. Sometimes I understand maybe the business model, but then to know that this one is a promise with the volume of the information, to pick out this one is the promise in the contract. That's my challenge. Yeah.
Let's clarify there. So is it pick out the promises or actually identifying the performance obligations? Which one exactly is tripping you up?
Like to identify that this one is a promise when I'm on step 2.
Okay. So what we'll see in step 2, right, is the first part is identifying the promises. So what we are saying we're going to deliver, and we'll speak to that. But then the key part, step 2, is identifying performance obligations. So we start with the promises, but the end goal of step 2 is to know what the performance obligations are. And I understand. I definitely understand because personally, I think that's probably the most important step because once you've got that right, it actually follows through. Everything else kind of follows through from step 2. And I have found that people do tend to struggle with that a lot. But again, we're going to have a structure, which I hope the structure will um, help guide how to identify the performance obligations and the promises. So we'll speak about what are the promises, how do you see that this is a promise, and we'll practice that as well in Printco. And then after you've identified the promises, noting that not every single promise will be a separate PO, how do we dwindle down from promises to performance obligations? So that is definitely going to be covered. And please, if it's still not clear when you're doing that, stop me. It's revise. Okay.
Yeah.
Cool. Camilla?
Good morning, Kanye. Good morning, everyone. For me, my biggest challenge is always when I have to go through the steps and I have to balance maybe my own discussion in the theory. So I just didn't like never know how much of the standard should I put in and so that it's also not theory dumping. And I think sometimes the solutions for CTA are not so helpful because you'll hear lecturers saying, no, but we put the solution in this way for you to learn, not that for you to write every like standard paragraph. You get what I mean? So that's what I struggle with. So even with yesterday's homework, I mean, the one we're gonna do, it was just such a drag for me to do the second required.
Because you felt like going through it, because I mean it was step 1 to 5, so to go through everything, and we had a lot of theory in the solution.
Yes, definitely.
Okay, got you. Um, so with the theory thing, I think I'll answer that even now, right? But as far as theory goes, you do not get marks for regurgitating the standard, simply because we know that you've got it with you. So we're not awarding marks for you knowing how to read, essentially, right? Generally, as a general rule, we award marks for you applying it. And what I'll always say, and we'll go through it as we're going to do the discussion, is principle. So identify the principle, and the principle is not the entire paragraph. The principle is a part of the paragraph which speaks to the key thing we're looking for. So as an example, when we speak about identifying performance obligations, there are two key things for performance obligation. One, that the item or the promise or the service is capable of being distinct. And the second is that it's distinct in the context of the contract. There are long paragraphs in IFRS 15 that speak to that, but those are the principles. So you will get the marks if you speak to capable of being distinct in the context of the contract, and then applying that. The long stories about and it's a capable of being distinct if the entity can, no, we don't need the paragraphs. We don't encourage the paragraphs. And this is where it gets tricky, right? There are times where SciCat does sometimes award marks for theory, but even then it's very minimal. They've not been very consistent with that, and it's been raised because we are very clear that they are very clear as well that we shouldn't be regurgitating theory. But sometimes they feel that it's framing theory. So what that means is you actually wouldn't be able to give context, or the reader wouldn't have context as to where you're going if you didn't provide that theory. So then they'll sometimes award a mark or half a mark for that. My view is I wouldn't waste time on that because you're going to get a half a mark or a mark. And what you're going to be worried is I'm going to lose this half a mark and write half a page of theory. Waste way too much time when you could have actually won, or not won, but achieved 3 marks by applying the theory to the actual scenario. So focus on on identifying the principle, applying the principle, and concluding. And we'll speak to that and we'll see how that plays out. But though that is where the marks actually sit. That is where you actually gain the marks. Repeating paragraphs, if you ever find yourself writing a whole paragraph, you're doing too much. That is too much theory. You're going to feel like half a page is theory. You're going to feel like it's a waste if you ever get that script back because nobody's going to award that mark. Or you'll get half a mark for half a page of writing. It's just not worth the benefit. The benefit is not worth the cost in terms of time. So avoid theory. Um, uh, Personally, when I went through the solution, the very first time I went through it, I was just like, guys, no, this is way too much theory. And to your point, the answer was like, no, we're just teaching them. And I will highlight as we go through the theory that I wouldn't do this. I would exclude this. I would exclude this. I would exclude this, and show you what I would suggest to include as how to just bring in the principle and not the entire repetition of the standard, because it is not helpful. It does not prove, because remember the whole point of the board exam is to prove competence. the ability to repeat something that's sitting next to you from the book doesn't prove competence. It proves an ability to read. We know you can read. That's how you got through high school, varsity, honors. We know you can read. So it doesn't help us. So stay away from the theory. But yes, I'll show you the parts that I don't think we need to keep, but we'll talk to that. And thanks for that. That's very important. We see that happening even through APC as well. People are still theory dumping and it's costly. You don't have the time. That's the biggest thing for me. You do not have the time to be doing it. Sandiswa?
Morning, everyone.
Morning.
Morning. For me, I know that I have a problem with theory questions and calculation was usually my problem, but at this point, I feel like everything is a problem. I think I've failed so much that I don't even know what I know and what I don't know. So yeah, because for me, I've been on this road like 3 years ago where I attempted my ITC and I exhausted all my ITC attempts. And last year I had to go back and redo CTA again. So there is that anxiety of I really don't know now what I really know and what I do know. There's just that battle in my head.
Okay, okay. Well done to you, Sanisa, for coming back and for passing CTA again, because actually, as much as it doesn't feel like it, that just tells you that you actually understand the principles, right? The fact that you went back and you're able to pass again, that tells you that you get it. You get the information. So don't forget that. You understood and they believed in you enough to let you get through CTA. So that means you can do it, right? You can do it. It gets, I mean, it did this journey is tough, guys. Like there's no part, nobody who's ever gone through this is ever gonna pretend that it was an easy road. I definitely don't pretend it was an easy road. Um, but I think one of the key things, and I think I always emphasize this for everyone, but I think it's more important when you start to doubt yourself, is that you need to take some time to reflect, right? An honest reflection, because you do not pass without knowing anything. That's not possible. So one of the things you're telling yourself, it's not true. It's not true that you don't know anything. You definitely know stuff, and you know a lot of it, and you know it in more detail than a lot of people. So don't forget that. That's not true. Then what's very key about an honest reflection, and this is why I am a very big believer in questions. A very big thing about an honest reflection is that when you're done going through a question, when you go through it, you need to go through it to try to see where did it go wrong. Yes, true, you might not have got the marks, right? That's why you didn't pass a specific question. You didn't get the marks, that's fine. But the question becomes, why didn't I get the marks? So when you compare your answer to the solution, the key question to ask yourself is, did I lose this mark because I actually didn't even think about this principle? Like this thing that I'm seeing in the solution, the thought never even came to mind. I don't even know where they took it from, or I can see it now, but when I was writing, I didn't even think about it. Because that points to where the technical gap is, right? If there was something happening in the scenario, the question asked the question and you didn't make the link, that could point to a technical gap. That doesn't mean the gap is, for instance, in this question, the gap doesn't mean there's a gap in all of IFRS 15. It doesn't mean you understand nothing in IFRS 15. Maybe you were able to identify and understand or see the principles in terms of identifying the contract, in terms of the transaction price, in terms of recognizing the revenue. But the principle that you missed maybe was in terms of identifying a performance obligation. And even there, maybe you didn't miss the capable of being distinct, you missed distinct in the context of the contract. So you've gone and figured out, well, look, there's a technical gap. But then you've gone and even zoned in further to say, where is the gap? The gap was not IFRS 15. No, it was IFRS 15, step 2, and the part on distinct in the context of a contract. So then you can start to fix it because now you know where the problem was. You can now zone in, go to what IFRS 15 says about this, consult with the lecturers about about the area you struggled with. Go through specific questions that speak to that part, right? That require you to look at step 2 and try to revise that. Go to the videos that speak to that and revise that. Okay, that's how you start to fix those areas. If On the other hand, it wasn't that you didn't think about it. You did think about it. And you look at your solution or your response and look at the solution, just like, I mean, I've got all of this there, but maybe like Pamela said, yours is all the theory. Then the issue is an exam technique issue that you're theory dumping and haven't learned how to apply. So we start to fix that because maybe the technical knowledge is solid. The technical knowledge is there. So you knew exactly where to go. You knew exactly which principles they were talking about. And maybe not 100%, obviously, but for the most part, you got it. You understood the principles from step 1 to step 5. You knew the key things to consider, but you did not apply it correctly. So you brought in the theory, right? So what the issue there is, it's the exam technique. You need to learn how to discuss the question, right? You need to learn how to bring in the information from the scenario, put it together with the theory and make a conclusion so people can see your competence. So then now we know what the issue is. Now we know that what we need to do is actually go and practice questions, right? Practice questions and practice questions with intent, because we will speak to it and we'll practice it. But for example, a discussion question, I will always say IPAC or PAC, right? Identify the issue, identify the principle, apply the principle, and conclude. That will structure your discussion so that you're able to then, that's how you fix the problem. So that you don't just stop at identifying the principle, you actually apply. And apply means tell me how to bring this principle and how it's evident in the scenario. So we practice that. We practice that art of applying. And if that's what we're trying to fix, we're not gonna do questions, or we're gonna do the next question not under time pressure, but we're gonna do the next question that we are trying to fix the problem with under relaxed conditions. But we are going to practice this art to say every discussion I'm going to do IPAC, identify issue, identify principle, apply, conclude. You're going to practice that consistently until you get better at it. So the key thing is, remember, you know stuff, you know a lot. There's a lot in this brain, guys. I remember packing my stuff when I was moving back home after CTA, huge books, and I was like, there's no way I know all of that stuff. There's no way that information's in my head, but it is because you passed. So it's there. The key thing is learning how to unlock it and how to demonstrate how it's there to other people. You need to, it's there somewhere, guys. It might be in a corner, it's hidden, whatever, but you need to remember, find a way to open that door into that corner. That's the unlocking. Open the door to what it is, and then very key, communicate it to the marker so they can see your competence. They can see that you're competent. You're able to prove this competence to the next person. Okay. And a different way to think about it is what we're doing here. It's not for the sake of doing, right? We aren't going through board exams because we're bored, right? We're doing this because we are looking for those 4 letters at the end of our names. So at the end of this, you're going to be a chartered accountant. And when you're a chartered accountant, what you're going to be doing in the world, in life generally, when you go to work, is people look to you for answers. They look to you to solve problems. And it doesn't help if all the information is here, but you can't share it. It doesn't help if somebody's asking you a question and you aren't able to communicate the answer you have to them in a way that they understand. And that's really what writing an exam is. If you think about it that way, that someone is asking you a question, what they want is for you to give them the answer and tell them why that's the answer, so they can also learn, so they can also go and explain to somebody else. So if you think about it that way, to say, okay, if I'm doing a discussion, I'm discussing with a colleague or my boss, right? I'm discussing with my boss. My boss wants a memorandum, and this memorandum must give them the steps so they understand that they understand how to assess this contract I'm looking at, and they can go and explain it to the FD or the direct or the board, and take them through it in a manner that is easy to understand. That's what I'm trying to do. Communicate how this thing should be done. Communicate it in a manner that is helpful. So if you think about it, if that's the perspective you have, you won't then just repeat what this was provided in the scenario. You won't just repeat what was in the standard. You'll bring the two together to say, I'm saying that this is a PO because this proves this proves that. So that when they communicate to somebody in a board meeting, they can explain as well why they reached a certain conclusion. I am saying recognizing over time because we're doing it like this and this and this. That is why there's always a need for a because and as a result, therefore, so other people can understand the why. Think about it from your point of view. If I just tell you, we're doing this, and this, I don't explain to you the rationale behind it, you won't remember that because you don't know the why. You don't understand the why. You just know that Kanye said. That helps no one. Kanye said helps no one. So that's why the practicing the exam technique and the manner in which we communicate our competence, the manner in which we communicate our solutions is incredibly key. Also, for us to be able to understand what the standard is trying to achieve is key to say, what are we actually doing with this IFRS 15? What are we actually trying to achieve? That helps us work through it as well in a manner that makes sense. To say, okay, when they ask me for a calculation, for me to have gotten here, I need to have done this and this and this, and that's how I'll be able to determine the amount that's finally going to go into the books. So it's a mixture of making sure you understand not just the steps in isolation, but where we're going, what we're trying to achieve with all of it. Okay. Thank you guys so much for being very candid and being very transparent. And just trusting, I guess, the space to let us in into what your struggles are. I see in the chat as well, got issues with determining the transaction price and allocating. So essentially the measurement portions, step 3 and 4. And again, also there are a few different parts to consider. You need to also identify which parts, so we'll speak to that. And contract modifications, make me sure I could disappear. I'm sorry about that. Unfortunately, we don't touch modifications in this question, but we do have a decision tree in the slides, which I think you guys would have seen, which might help with that. I had not intended to go through it, but let me just adjust the slides so that I can discuss that as well. Sorry. Just so that we can go through the decision tree and try to make it make sense. But I think also here, the key thing will be understanding why we are doing what we're doing. Okay. Cool. Cool. So how we're going to go through today's lesson is we're going to do a bit of a refresher on the actual standard, but not a lot of detail, right? We're not going to try to reteach IFRS 15. Excuse me, IFRS 15. We're going to go through the principles. So first of all, looking at what is the steps, right? What are the 5 steps we need to consider? What the steps are trying to achieve, and then going into the high-level principles in each of the five steps. Then we were going to try to entrench the principles, or the focus of the lecture really will be applying these principles, right? Because as I said, I'm a very big believer in questions, because I think the questions help us see if we're able to apply the principles. The questions help us see how the different principles can be tested differently. So different ways to ask the same question, essentially, and how we can then alter our thinking to address that. So as we go through the question, we're going to first go through the question and then pull out where are we seeing, because one of the key things is being able to see that, oh, here they're speaking to step 2 and they're speaking to this in step 2. Here they're speaking to step 3 and this portion. So we're going to go through the question to identify those key things, and then we will work through a solution together. When we work through a solution, my focus will not be providing every single answer, because you've got the solution. If you don't have it, you will get it. So you can read that. The key focus for me will be the exam technique. So, I mean, we're only going to look at part B and C of PrintCo, which would be, part B is the long question, which is from step 1 all the way to step 5. So how to structure your answer to be able to work through that, how to structure the different parts and how they should lead onto each other. So it'll be the key focus, the exam technique. And then, of course, we will go through not just the theory of the exam technique, but then how to put into practice. So we'll do a few answers or part of the answer in each of the steps. And then for part C, we'll do the actual, it's nice and short. So we'll do the actual solution there, the calculation, and how we should think through the journals. But that's going to be the structure for today. So the idea is to go through the principles first, take a break, work through a question, as we work through the question, we're going to speak to a lot of, we're going to dissect the required and all that wonderful stuff, and put out principles, and discuss things that aren't 100% clear to anybody. So as I say, when I say work through the question, working through the question and solution, that is where I'm hearing a lot of your voices. I will read paragraphs and you guys will provide input as to what you're seeing, and we'll discuss and all that stuff. Okay, so it's very interactive, but I'm very happy. This class seems to be quite keen to interact, so that's quite encouraging. Are there any other comments or questions before I jump in? All right. All right. Can you guys see my screen? I'm sharing the PowerPoint. Can you guys see it? Cool. Perfect. Happy enough. Okay. So IFRS 15 revenue. This standard is essentially what we refer to as a residual standard. Okay. So IFRS 15 is essentially the standard that covers how to account for revenue, all revenue, unless that is covered by another standard. And that's why I say residual. So if it's, for instance, they're property companies, so companies that own properties, and their main revenue would be rental income, that would be covered by IFRS 16 leases. So for those particular entities, they will use IFRS 16 leases to account for their revenue. Because it's still revenue, because what is revenue? Revenue is the income you earn from your ordinary activities. So for them, the ordinary activities is renting out buildings or other assets. And as a result of that, there'll be lessors, and they'll account for their rental income as instructed by IFRS, or as prescribed by IFRS 16, not by in terms of IFRS 15. Okay. Similarly, insurance companies, they will deal with their contracts in terms of IFRS 17. Banks will deal with their main revenue would be interest income, right? So because their inventory is financial instruments. So therefore, they will deal with their thingamajig, their revenue through IFRS 9. And all other revenue is then covered by IFRS 15. Previously, we had a few different standards, IAS 18, IFRS 11. I mean, IAS 11 doesn't exist anymore because we wanted the thinking. This is very key. The thinking with IFRS 15 was to create a singular revenue model, to say this can be used by people in construction, by people in normal retail, so buying and selling of goods, by people in service industries, because we are trying to apply a singular logic to say, essentially with the revenue contract, what is happening between the entity and the customer is the customer is buying something and paying the entity for it. The key question with IFRS 15 is to assess what are the items that the customer is buying. Is it just one item? Is it just two? And again, if as always with accounting, substance over form, right? Just because the contract says I'm selling you this thing and I'm giving you this for free, doesn't mean necessarily the second thing is free. We need to assess if it's a single PO or two POs, right? So first key thing is what exactly is being transacted between the customer and the entity. That's the first thing. Then, how much have they agreed to transact? How much of the transaction amount that they've decided to exchange for these items that have been transferred between the entities? And then, okay, now we know how much the entity is going to get for these goods. How much of it relates to item 1? How much relates to item 2? And then, how are they delivering item 1 or 2? Is it, okay, today I give you this item, we're done? Or is it a continuous relationship that happens? And that the thinking was, and the logic was, this is applicable to pretty much every kind of contract, right? For every kind of contract, you can determine how many items are being sold. We can determine how much we are transacting at. We can find a way to allocate between the items we're transacting at, because just think about it from a business point of view. If you're running a business, by the time you decide how much you're selling your items for, that is based on your profit margin. So you've already assessed that, okay, I'm going to sell these 2 items. I might say there's a discount here, but actually the discount relates to both because I'm trying to accomplish objective A and B, right? So from a business point of view, there's always that thinking that has already happened. There's already that thinking that has gone into determining how to split the cost and ensure you make adequate profit on the sales you're going to make. So that's what we're trying to achieve. So say, I mean, guys, yeah, sure, you're saying it's free, but there's no such thing as a free lunch. We don't go around giving out free things. So this amount for this thing you're giving away is either included as here as part of one PO, or it's actually something separate, and we could have done it separately. But essentially, every entity knows. Every single entity knows when they are selling items how much there's how to split. There is a split that they're doing, and they know how much profit they want to make from it. There's a desired margin from each of their goods. Okay. And also to assess is the continued involvement, I guess, to say, at which point in time is the customer satisfied that I'm done? Right? That's the key thing about IFRS 15 as well. IFRS 15 is a very customer-centric standard. It looks at if the customer, would the customer think I have delivered everything to them? Would the customer think I've delivered anything to them? Or would they think, okay, cool, you're kind of in the middle of delivery, but I can't actually use the thing you've given me as yet, right? As a customer, is the customer able to make use of this item you've given them? Or are they not? And that's speaking to POs, okay? So it's a very customer-centric standard. What is the customer's perspective? How do they see it? Can they use stuff or not? Then, so essentially, residual standard. Then I think you guys are probably quite familiar with this because, I mean, you've gone through CTA, but the standard speaks to the main text. So that's in part A. That's where the key principles are contained, right? The main text speaks to key principles, and they go through all of these key things. The appendices, A is always for the IFRS prefix standards, the defined terms, and then B provide additional application guidance. And then the illustrative examples provide clarity, I guess. So for if there's a specific principle that you're not fully understanding here, the illustrative examples are a great source to be able to see how this could be applied. So it tries to help us already apply these principles. So to try to translate the IFRS to English so we can see how this could be used in an actual practical environment. Okay, so we come here to clarify the principles that we are struggling to understand here. Okay. So what is the 5-step process, right? Or maybe let's start there. IFRS 15 speaks to a 5-step revenue recognition process. And that 5-step process starts by first identifying whether or not you've got a contract. Okay, makes sense, right? The standard is about contracts with customers. It's revenue from contracts with customers. So you are not in the scope of the standard of IFRS 15 if you do not have a contract. So the first thing is identifying whether or not you've got a contract. We won't spend too much time here because it's usually the easier part to work out. Usually it's quite clear whether or not you've got a contract. But once you've got a contract, once you're comfortable that there is a contract, move on to step 2, which is then identifying the performance obligations. And like I said, this for me is, I think, where the crux is, because this kind of leads on to the remaining steps. So in identifying a performance obligation, what you're trying to assess is, okay, there may be 5 promises that I've made in this contract, but is each of these promises a separate performance obligation, right? So what is a separate performance obligation? A distinct good or service in the contract. So something that's distinct that the customer can use by itself. That the customer, if I gave them this, they could actually move on. They could actually carry on with their lives, essentially, even if I don't provide the rest of it. So it's identifying those items that are performance obligations. So what is my obligation to the customer? What is it that if I do this, the customer will be like, great stuff. So 1 out of 3, done. Okay, I can carry on with this. I can work with this while you do the rest. It's kind of how to think of performance obligations. The transaction price is how much has been agreed. all right, in the contract. There are a few considerations we'll go through there. And then step 4 is only applicable if we decide that in step 2, there's more than one PO. So if there's only one performance obligation, this step 4 is irrelevant because nothing to allocate, okay? So if you've got more than one performance obligation, 2 or more, we then need to find a way to allocate the POs. And the last step is to recognize the revenue. Meaning, is this revenue something that we're earning continuously, like over time, or is something that's earned at a date? Is there a set date that happens where we transfer control? Because the key, another very key thing with IFRS 15 is that they're looking at this transaction between entity and customer and saying, essentially, you earn revenue as you transfer control of a good to the customer, a good or service to a customer, right? So as I do something that gives the customer control. So once I'm done with this, the customer controls this good, the customer controls the service, so they can then take this good or service and use it. That's how and when we earn revenue. So that's when step 5 speaks to, is it over time? So am I transferring control as I'm performing, or does the control get transferred at a specific set date? And if that's the case, we then need to determine which date. Okay. So steps 1, 2, and 5 speak to recognition. Okay. So those are the parts of the standard that help us figure out how to recognize the revenue. And then steps 3 and 4 speak to measurement, how much revenue we're going to recognize. So in any question, if the question wants us to, and it's broad like part B of Printco, wants us to speak about how to recognize the entire contract, we will, and we should, go through each step in this order, 1 to 5, okay, because they do lead onto each other. However, when we teach it, when I teach it, I prefer to speak to recognition first and then measurement. So what you'll see today is we'll start with 1, 2, and then 5. Then we'll come back to 3 and 4. Okay? So we think of the recognition principles first, and then we speak to measurement principles. Also how the standard is written, and it's also in line with how generally the standards are written. The standards always start as recognition and then come to measurement. Okay? But in a question, always structure it like this. Always go from 1 to 5. Don't go 1, 2, 5, and then 3, 4. In a question, if they ask you to do all 5 steps, structure it according to this. All right. So step 1, identifying the contract of customers. Like I said, identify whether or not a contract exists is the first step, but it's usually it's the easiest step because it's easy to see whether or not you've got a contract. Okay. Key is that this is an AND test, meaning all 5 of these criteria must be present for us to conclude that there's a contract. Okay. This is contained in paragraph 9 of the standard. So if you ever forget it, just flip back to it, and you can then use that and apply to it. Okay. But essentially, first, that the parties must have approved the contract and are committed to performing their obligations. Approval can be in writing, it can be verbal. So it can be a contract that is signed. It could be, if you think of you and I going to a Pick n Pay or a Checkers or Spar or whatever, we don't actually sign a contract, but we approve this contract through our actions, and that we provide or we select items off the shelf and we pay for them. That indicates that we are happy with the item and we are comfortable to pay the price that has been determined. And by the retailer, Checkers, Pick n Pay, Spar, giving us the good and accepting our money, it also indicates that they're okay they've also approved the contract, that they're okay to sell this item to us at that price. So it's one of those, it's not a written contract, but through our actions, we have approved this contract. Okay. Second, that it's easy to identify each party's rights regarding the goods we transferred. So back to the retail example. As a customer, my right is to obtain the good that I'm buying. As the retailer, their right is to receive the cash for the stated good. So the amount that they have stated on the shelf that they want, their right is to receive that from me. Obligations essentially the other way around. So my right is to receive the good, by implication to pay for it. Pick n Pay's right is to receive the cash, obligation to provide the good for me. Right? Then we can identify the payment terms. Payment terms, and that scenario is very simple. It's the price stated on the contract, and the term is that I'm going to pay. Price stated on the shelf, and the term is I'm going to pay at the till. I'm not going to leave with the good without making the payment. Okay, but you're able to identify that because we know how these contracts work. Commercial substance is, will the cash flows of the entity change as a result of this transaction? So meaning when I take this this product from the shelf and pay, will there actually be a change in the cash flows? And in this case, yes, when I take the good, I'm actually going to pay for it, and ShopRite will then have an increase in their cash flows as a result of my transaction. And the last one, that is it probable that the entity will collect the consideration that they're entitled to as a result of the contract. This one sometimes gets confused between when are we in IFRS 15, so do we have a contract, and when are we in IFRS 9, do we have an impairment of a trade receivable? Key thing to think here is for us to be able to determine whether we've got a contract, we're at the very beginning. So it's before we've recognized any revenue. This is step one. This is the very beginning. It's at the inception of the contract. So this is an assessment we make at the very beginning. So at the very beginning, we assess whether we think that this contract, this customer, has the intention, i.e. they will or they want to, right? They want to make the payment, and they have the ability to make the payment. So they've got the capability, they're actually able to do it. Okay. Easy enough with a cash sale, like a Pick n Pay ShopRite sale at the cash till. Easy enough if I'm making the payment on the spot. It's clear that I've got an intention and ability because I've got the, and in addition, I've got the capability because I've made the payment and it's cleared, right? The bank has approved the payment. So it's clear that I've got the intention and ability to pay. In a scenario where you make purchases on credit, so maybe you've got a store card, your intention and ability or the customer's intention and ability to pay is assessed because entities will always do like credit checks in the background, right? Before they give you a credit card or whatever, or store card, they'll always do a check to see what's your past payment history? Do you generally make payments on your obligations? That indicates your intention to pay. They'll also, in that credit check, ask you questions about what your income is, what your expenses are, etc., etc. That indicates your ability to pay, right? So they see that you're not over indebted, you aren't overly stretched, so they're able to assess your intention and ability to pay. And this all happens before they let you buy the goods on credit. Okay. So here we're looking at intention and ability, and it's usually based on past history and your past payment behavior, as well as so the intention is both based on your past payment behavior. Ability is based on, are you now suddenly over indebted? Has something changed from your past payment behavior, making it that you've lost certain cash flows, etc., etc., in this new contract? Okay, that's what we assess on day one. If on day one we assess that you're good, we're happy, you're reliable, you intend to pay, you aren't over indebted, and then we get into the revenue contract. And we go through all the steps when you're going to recognize the revenue, then you've got a trade receivable at the end. If something happens subsequently, and now you aren't able to make the payment, that doesn't affect step one. We are still comfortable that we've got the revenue. We don't go and reverse the revenue. The revenue is done. We made the assessment. We're comfortable with the assessment. That affects the trade receivable. That's an IFRS 9 consideration. If now in January we made the sale, in June suddenly something happened and this entity can't afford to make payments, that's a subsequent consideration. That's an impairment indicator for the trade receivable. Doesn't affect step one, does not affect IFRS 15 recognition. That stays as an IFRS 9 consideration. That's a different assessment. We're going to assess the expected credit loss because of new circumstances that have happened. We don't come back and change revenue. because we thought somebody could pay us and subsequently they couldn't pay us. That doesn't change the revenue. The revenue stays. We made an assessment on day one. We account for that assessment on day one. We stick to it, right? As long as we used all the information available at that date and with this assessment was correct, we consider intention, we consider ability with the best information we had at that point of time. We do not undo or reverse the revenue. We keep the revenue. The subsequent facts are a subsequent consideration, and that affects the receivable, not the revenue. Very key thing to note. It doesn't get tested often, but it does get tested here and there. It's a very key thing to note. But again, I said, step one, generally self-explanatory, right? If you're in a question and they ask and you forgot what the 5 requirements are, it's fine. Don't panic. Just go to paragraph 9, remind yourself what the 5 are and apply. Okay, so flag them. Flag the paragraph so that you know how to come back to identifying the contract. Okay. So then we are happy, we've got a contract, meaning once we're happy we've got a contract, we can move on to the remaining steps in IFRS 15. We can move on to step 2, being identifying POs. Are we still together? Okay, thank you. We will then look at contract modifications. So I'm hoping that this decision tree will be helpful when you guys try to work through this. And I hope it makes it less of a nightmare, okay? But before we look at the decision tree, what are we talking about here? What is a contract modification? It's just simply, we had a contract. So step 1, we were happy. We agreed there was a contract between the entity and the customer. We knew what the terms were, right? We could identify the payment terms, could identify each party's rights and obligations. We were comfortable. Then we decided someone wants to make a change. That's the customer or the entity. Someone then wants to make a change to the agreed terms. So we knew what the terms were, but we want to actually change those terms. When we change those terms, we need to figure out now, what does that mean? How do we now recognize the revenue going forward after changing these terms? So the key thing is, it needs to be, first of all, before we even get into a decision tree, or part of the decision tree is, before we even start changing our revenue, this modification must be approved. So it mustn't be a desire. It mustn't be that the entity wants to make it a change, but they actually haven't communicated to the customer and the customer hasn't accepted this change. The entity wants to make a change. They've communicated this change to the customer and the customer is happy to accept the change. So it's been approved. They either sign an amendment order or there's something that shows that this change has actually been approved. The two parties have agreed to this change in the contract. Okay, if it has not been approved, if it's a thought, if somebody has an intention, has a desire to make a change, but actually there's no approved change, we're not here. We aren't even in modification guidance, right? That's the first part. If it's not approved, ignore it, keep moving. If the question speaks to the company realizes they've charged too little, as an example, for the goods, and they would like to increase the price, that's fine. If it doesn't go further to tell us that the price has increased, and the customer has accepted the new increase, or they've renegotiated or something, we're moving on with our lives. It doesn't matter. We're going to carry on dealing with this contract as it was. We're going to ignore it. So it must be more than an intention. They must have wanted to, spoken to the customer, renegotiated, agreed, and then we start to worry about, okay, now what do we do? Now that they've actually approved the parties, so both parties are aligned on this change, then we assess. We take a step back and say, okay, so what is actually changing here? Are we actually bringing additional goods or services? Right? So is it that the change is initially we were going to sell 20 water bottles to this entity or to the customer. The customer now wants 25 water bottles. So we're now providing 5 more than we had. So additional goods or services. Right? If we do have additional goods or services, so we're providing 5 more goods or services, then the next question is, okay, but how much? How much are we selling these additional 5 goods for? Right? So where we saying we're selling 20 water bottles at 50 Rand each initially. Now we're adding 5 and we're selling these 5 at 20 Rand each as well. Happiness. Then that means we are selling these goods or services at their standalone selling price. Okay, so if initially we are selling these at 20, I mean the first 20 at 50 Rand, we're selling the next 20 at 50 Rand as well. That's indicative that this is the standalone selling price of the additional 5. Then these 5 we should treat them as a separate contract. What does that mean? It means that this contract we had for the initial 20, we are going to carry on, counter for it as whatever plan we'd had. So if we had said each one of the 20 is a separate PO, we're going to continue exactly on that. This additional 5 won't affect this contract. So we're going to treat them as 2 separate contracts. So all the decisions we've made here, because remember here we've already gone through all 5 steps. We'd have considered that there's a contract, how many POs, the transaction price, we've allocated, we've recognized points of time over time. We don't change that. We carry on with that as is. Then for these 5, we go through the process again. It's a separate contract, so we go through 5 steps for these 5 again. To assess for these 5, are those 5 also, do they also have are they also separate POs for each of them, for some transaction price, etc., etc. We do the exact same thing for all 5 of those and treat these contracts separately. Meaning this contract can finish while this one is continuing. This contract can be terminated while this one is continuing. They don't affect each other. Okay, so if we are buying the additional goods are at the standalone selling price, right? So if they are additional goods and the standalone selling price, it's a separate contract. So initial contract continues as is. Don't change anything. Additional goods, new contract. Start the 5-step process for these 5 by themselves. Okay. Key thing I want to touch on here. The standalone selling price does not actually mean the exact same price as was agreed in the initial contract. The standalone selling price is essentially representative of how much does the entity typically sell these goods for. And in practice, the same goods can be sold at different prices for different reasons. Okay, so it could be that I typically sell this bottle at 50 Rand each, if I'm selling less than 20. But once I sell more than 20, I start to sell at 18 Rand. Sorry, not 18, at 40 Rand each, right? It could be that for certain classes of customers, there's different sales prices. So standalone selling price does not mean 100% equal to the first one, but it means it's a price that I do typically sell these goods for at to someone else in the market. Typically, in a question, we will tell you that it's a standalone selling price. If we don't tell you, we will indicate, we'll say, we'll have like key trigger words like at a price that is normally sold in the market. So while it's different, it's a price that's normally sold to customers of a similar class by the entity. So we'll point you to the fact that it's a standalone selling price. Noktula?
Good morning,
Morning.
team. So I just wanted to get clarity, because I'm going to take you back to the contract modifications, right, and the approval by both parties. So in paragraph 90, there's a line there at the beginning that says a contract modification may still exist even though the parties to the contract have a dispute about the scope or price or both of the modification, right? So I see, well, further on it discusses the difference or maybe a disagreement in terms of the scope or the price. So I just wanted to understand if at all it's possible that a modification still exists when there is a disagreement about both those aspects. Because if there's a disagreement about one of them, I think to an extent the parties will still agree on the one, so an approval exists, I think, at that point, just a point of difference maybe in terms of the price or something. But I'm confused by whether it is possible that it exists, a modification exists when there is a difference on both the scope and the pricing. Yeah, thank you.
Okay, sorry. I just want us to just read that so I can not lie to you. Like you said, and may exist, even though the parties have a dispute about the scope or price. or both, or they've approved a change in the scope but have not yet determined the corresponding change in price. And so just saying that you understand this part, you understand this last part, to say they've approved that there will be a change, but we're still going to determine the price. And they're saying determine whether the rights and obligations that are created or changed by the modification are enforceable. We'll consider all relevant facts and circumstances, including the terms of the contract and other evidence. Parties have approved a change in the scope, but have not yet determined the corresponding. Okay, that's fine. Okay. So, like we said, it's key that the modification must be approved. It's quite easy to understand that we can approve that we're going to have additional goods, but we don't know what the price is. It's harder to agree on a price but not understand the scope, but it can happen either way. I think I'm trying to think of the scenario they're thinking of, because if this wording here indicates that, or both, indicates that they foresee a scenario where there could be an approval, but they have not yet concluded on either the scope or the price. I think in practice, what I would see that kind of modification as is where the parties agree. Like, again, let's say we're selling, 20 water bottles at 50 Rand. And in that case, we've agreed as the entity and the customer that come to a decision to say, look, or the customer says, look, I'm aware that this 20 is not going to be enough. I'm going to need more. So at that point, they're like, okay, cool. How many more? Like, wait, let me come back to you. I'm going to go and do I'm going to go and confirm. Maybe let's start off with 20, but it could come to 50. I could need additional 50. Like, okay, cool. How much will you charge me? And the entity is like, well, it'll depend. I will charge you, if it's 20, I might charge you this. If it's 50, I might charge you this. So it depends on how many more you need, because I've got different prices. You could get a bulk discount, so you've got 50. So in that case, we've both got an agreement that there is going to be a change. However, at this point in time, we actually don't know what the scope is. We don't know if we're going to add 50 goods or 20 goods, and we also don't know how much we're going to charge to them. So in that case, there is an approved modification, there is an approved change, so there's a modification, but the scope and the price are not yet 100% determined, because they are kind of dependent on each other. So in that case, we will probably, and I think that in that case, if we had a question like that, it would say that the entity will charge standalone selling price of either the 20 or the 50, depending on what the client eventually confirms. So we'll have a separate contract, and all of that will be we'll take that separate contract through the 5-step process and make estimates, etc., based on our past experience. So I guess the quick answer is yes, you can have a modification when both are not yet determined, if it's not 100% determined yet, but it's because both parties are aware. And it's quite clear that we're still going to do this. We're still agreeing that we're going to make a change, but there's still some uncertainty because one of the parties needs to come back on something or confirm one of the facts on something. One or both of the parties needs to confirm some facts. Is that helpful?
Yes, thank you. It's helpful. So I think effectively then an agreement or an approval will always be present for us to consider a contract modification to exist.
Yes, there must always be some kind of agreement, right?
Oh, okay.
Not all the facts must be determined as yet, but there must be an agreement that something is going to change. We're going to change this because it's no longer working for both of us. We are going to change it, but we need to then figure out, there might be still some things to figure out, but we're definitely going to make a change.
Yeah, okay, thank you. Clear.
Cool. Happiness?
Yes, but I just
Yes.
wanted to ask something. I think you left me when you were talking about the transaction price and the standalone price, and when you were explaining about market price, something like that. So I didn't quite understand. I don't know if you can repeat that statement that you said about the transaction price and the standalone price.
Sorry, I'm struggling. You said I lost you. I said something about a transaction price and
standalone price. So we were talking about transaction price and standalone price, and then you said something about the market price as well. So I didn't quite
Okay.
understand. So I don't know if you can repeat.
Okay, cool. All right. So, I think we're talking about it right here, right? So this part of the bubble speaks about if the additional goods or services are at the standalone selling price. And what I was trying to explain there is that the standalone selling price is not always the exact same price that was charged in the initial contract. So in the initial contract, we be charged 50 Rand per bottle, but in the modified contract, we're charging 40 Rand per bottle, or 45 Rand per bottle. That could still be the standalone selling price if that is the price that we would charge someone else for this kind of good. So in practice, different entities could have different price lists, or a price list for the same good, where we are saying, for people who have been our customers for 5 years, we will charge them this much. For people who will pay within 30 days, we charge them this much. For people who pay within 60 days, we charge them this much. For people who are in a retail space, there's this price. So people in the mining space, there's this price. So an entity could very much have many different prices that they charge for the exact same good. Okay. So when we're talking about the standalone selling price, we are looking at a price that the entity does typically charge for this good, right? It is an amount that typically we could charge somebody for it. It might not be the exact same price we agreed before, but it is a price that is not ridiculously below what we typically charge for this good. One of the reasons we might charge less for the modified goods is because maybe it's now into a bulk. It's entered into bulk. So maybe there's a price we charge we buy less than 20, but there's a price we charge we buy more than 20. So now you apply this discount because now you're buying more than 20 bottles. So applying a discount to it, but that discount is in line with our normal discount that we apply as an entity for selling these goods to other people. So the standalone selling price is essentially trying to represent the amount that we typically charge for these goods to somebody else on a normal day. Does that make sense?
Yes, yes, thank you.
Cool. Okay. So in a modification, that's one of the scenarios. A scenario where we've got additional goods and services, and in addition, we charge the standalone selling price for those goods and services. In those cases, we've got a separate contract. So that's scenario one. Additional goods and services at standalone price, separate contract. Scenario two is, well, we actually don't even have additional goods or services. How could that happen? That could happen maybe we realize we undercharged. So we sold these 20 bottles at 50 Rand. Actually, maybe they should actually have been 55 Rand. And this customer is amazing and so nice. They're willing to make this adjustment and accept the additional price increase. So we adjust the contract to increase the price. So we're still going to sell 20 bottles, but now the change is not new bottles. It's just the price is going higher. So instead of 50 Rand, we're selling 55 Rand. So in this case, we don't have additional goods or services. So we continue to account for to continue to account for the modification as part of the existing contract. What that means is we now say, okay, so for these 20 goods, we had said each one is a separate PO. Okay, we had said a separate PO. We had said we'd allocated 50 Rand as the transaction price to each PO. We are now going to make an adjustment. So we are going to make an adjustment to the existing contract. We're going to say for these 20 bottles, we are now going to charge, the new TP, the new transaction price is now 55 Rand. Meaning, as we deliver each bottle, we are now going to recognize 55 Rand revenue. Previously, we recognized 50, 50, 50. Now we're going to go 55, 55, 55 for each bottle we send. And we deliver. Then, if we've already delivered, let's say, 5 of these bottles at the point that this is done, we would have recognized revenue of, sorry, I'm using my own amounts now. I said it's 50 Rand per bottle, so I recognized 250 Rand previously. Now I've got a change in the price. So what we're going to do is we're going to make an adjustment backwards. We're going to change this amount because it's different now. We've actually undercharged. We've recognized too little revenue, right? Because it's still the same contract. So these 5 have been delivered, but actually the price we recognize for them is not correct. So we're going to add the 5 Rand to each of the 5 bottles. So essentially we're going to add 25 Rand to the revenue recognized. Okay, so how is that different? With this first scenario, whatever happened in the first contract, we continue. It doesn't affect it. We don't care. The new contract, the additional 5, we treat differently. With this contract, with this scenario, we are now saying, okay, this change affects our contract. So let's look at all our 5 steps and see where it would have changed. Has it changed our POs? No. Has it changed our transaction price? Yes. Has it changed our allocation? Yes. So then what are we doing now? It's changed our allocation. Has it changed whether recognizing point in time or overtime? No. We're still recognizing point in time. And at a point in time, we've already recognized 5 of them. We've already delivered 5 of them, delivered transfer control for 5 of them, meaning this new allocated amount, which is the 55 Rand, needs to be allocated, needs to be recognized for the 5 that have already happened. So we then allocate, we then recognize the additional revenue for that 5. It would be the same if it was had gone downwards. So if we had now charged 45 Rand instead of 55 Rand, we would make the adjustment to those that have been delivered as well. Okay. So for this one to continue to account as the existing contract, we would make a change to the existing contract if something has been delivered. So if we have delivered and used the previous price, we need to adjust that. We need to make the adjustment for that. Okay, that's that scenario. That is if we did not add any new goods, we simply change something else, which is typically the price. Then we adjust the price of the contract. And if you think about it, it makes sense, right? Initially, we were going to receive 20 times 50 for this contract. Now we're receiving 20 times 55 for this contract. We still need to make sure that the revenue we're recognizing is representative. So as we deliver each item, we need to ensure that it's reflected correctly in our books, right? We need to ensure that what's going into the books is actually reflecting how much we've delivered. So if we don't make that adjustment for the 5 we've delivered, that means we are understating our revenue because we've actually delivered 5 at 55 Rand and not at 50 Rand. So if we don't make the adjustment, we are understating our revenue. So we need to make the adjustment backwards. Okay? Because we're saying it's still one contract. It's still part of this existing contract. So we need to ensure that we are still recognizing everything correctly in terms of this contract and taking into account this change. Okay, that's if we had no additional goods or services, just a change in something else typically priced. Okay. In the third scenario, is if there are additional goods or services, but the additional goods or services are not at the standalone selling price. So similarly, 20 bottles, 50 Rand initially. Our adjustment now is we need 5 more, but these 5 we're going to provide at 20 Rand. Okay, so at a significant discount. We will then say, actually, what's happening is that this old contract is coming to an end. It's over. We're starting a whole new contract. We're creating a whole new contract. How does that play out? That plays out to say, if we'd already delivered the first 5, so we recognized 250 Rand revenue for the first 5, we leave that as is, we close it. That book is closed. We leave it alone, we look forward and say, okay, we had initially 20, delivered 5, there's still 15 outstanding. Okay, and there's still 15 times 50 of the revenue that was outstanding. But now we've also got 5 at, what did I say, 20 Rand, I think. Still got 5 to deliver at 20 Rand. It was to bring these new contracts or these new bottles together as a new contract. So those 5 were done. We're not making any changes to those 5. It's finished. Then, hey guys, are you looking at modifications, or the slide I'm sharing is contract modification? It should not be the 5-step process. Are you guys?
Okay. I'm still on the 5 steps. I don't know what's going on my side. I'm also on the 5 steps and I'm so lost.
Okay.
I can see that I can't hear anything. Sure, it's me.
I can't hear anything.